Welcome to M&A Mondays, the UK's first YouTube series dedicated to all things M&A. From interviews with the leading figures in the industry, to coffee chats with analysts, diversity panels, all the way through to workshops, we'll be covering it all. We do hope you enjoyed the video, and please give us a like and a follow on our social media. Thank you very much.
Hello everyone, and welcome to our first episode of the M&A Mondays series, where we will be delving into the investment banking series by talking to professionals in the industry from all levels, from the analyst level all the way up to the senior managing director level. I'm Yash, the founder and co-head of the UCL M&A group, and I'm joined today by Nicola, an analyst at the group and also an events executive. We're delighted together to welcome our first ever guest on the series, Matthew Ponsonby, the head of global banking at BNP Paribas, where we'll be kind of discussing his different aspects of his career, as well as tips to succeed in the industry. So without further ado, let's get straight into it. Hi, Matthew. How are you doing?
Very nice to meet you.
Nice to meet you as well. Thank you very much for taking the time to join us today. And I guess if we get straight into it, the first kind of question which I had was looking at your vast, expansive career. What really stood out to me initially was a unique degree that you did. I saw that you did Materials Sciences and Metallurgy. And so my question was, what made you make that initial switch from a STEM-based degree to the finance industry? And did you have any challenges along the way? And what would be your advice for STEM students who are looking to follow the same path into the investment banking industry?
Perfect. Good place to start. So look, actually, there are an awful lot of people in this industry who come from a STEM background, because it's not, which is slightly intuitive, because if you have a facility with numbers, that's it's a natural route into to investment banking, and most STEM students are, fundamentally there's a maths-based element to the degree. So as I said, I did a pure science degree, and I'd done some research. So I worked at the National Bureau of Standards in Washington for a bit, and was thinking about a more engineering-based career. And I went to a few interviews with some engineering firms back in the mid 80s, and the world was quite different then. And so, you go through the interview and you ask the normal question. They ask you the normal question: where do you see yourself in 10 years time or 20 years time? And being, like you guys, young and ambitious, I would sort of answer, well, I like to think that if all went well and I'd really done well, I could have a leadership position in the firm. And that sort of answer, you try and be ambitious but not too cocky about it. And they would all look at me and go, well, look, I've been here 30 years and I'm a plant manager, and there was very little ambition at that time for that I could see to take that to the roles I was starting in and have an aspiration to have a sort of influence on the companies you were joining. And it may have been the specific seats I was looking at, and it may have been the firms I was talking to. But in contrast, I actually, I went into consulting, into the more finance base, but I went into the sort of a more finance end of the consulting industry. Though those careers were pretty defined, that you were joining as a junior, but they were recruiting future managing directors or future partners of the firm. And that idea of having an ability to make a difference early on, but also have real progression through my career, was very attractive. So for me, it was that the engineering piece was less attractive. Now, time's moved on a lot, and Mr. Musk would disagree with me profoundly as to where the more exciting end of the world to work is. But at the time, it was and I think still, consultancy and then indeed investment banking was a very exciting place to work, and certainly it is a very natural route in from any science-based degree into banking. And actually, one of the things I'd quite like to emphasize is, as an industry, we probably got overly focused on where we were recruiting from. So in early 2000s, slightly following a lead from the US, the industry grew more and more focused on finance-based graduates. And that has actually some quite interesting diversity implications. And when I say diversity, I mean diversity of thought. Because fundamentally, if you're on a finance-based degree, irrespective of your gender, your country of origin, your ethnic background, the way you think, the way you've been taught, and the way and what interests you is actually can be quite aligned, because you're all coming together to do a very similar degree, whether from a similar background, with similar reasoning, and actually, it's been a focus of mine in graduate recruitment over the last few years to drive a greater diversity in terms of degree courses, because actually that brings a greater diversity of thinking. It also, as a side, in addition, brings it's helpful. We have a mandated 50-50 gender diversity for the graduate program here. And I think, but for me, the diversity of thinking is very important, because fundamentally, when you're joining investment banking, certainly the corporates, the non-market side, so the issuer side, private side, the bit I'm in, which I can talk about a bit in a minute, that is, you start off with a very high numerical focus to what you do, but fundamentally you're going to succeed based on your EQ as much as your IQ. It's all about getting on with people. It's building trust. It's being able to communicate, and therefore you need to have the most successful bankers tend to be those who both have a facility with numbers but also a facility with people, and that actually turns out that it's not necessarily someone who's just done a finance degree. Can be, but not exclusively. So no, I'm very keen to promote this industry to anyone, irrespective. When I started, it was a bit. I mean, I had colleagues who started who'd done history, who'd done music, who had a very broad group of degrees, and that's what I want to get back to. It should be, as long as you have the facility, basic facility with numbers, and this is not rocket science. You should be very thoughtful. Should be happy to think about this industry.
Yeah, that's fantastic. And I think positive news for everyone who is studying a diverse range of subjects at university, that this is a really good career path to explore.
Yeah.
And I think that leads me on very nicely to my next question. When you spoke about your early careers in consulting, and you worked at a firm which we now know as Accenture, what made you make that shift from consulting to investment banking? What are some of the key differences that you found?
Okay, well, the industry was very different then. So investment banks didn't really, we recruited our first graduates at Morgan Grenfell, which is the first bank I started, 3 years after I started. So the industry was really, the classical route into the industry at the time was you qualified as an accountant, and then as a qualified accountant, you moved into banking as a junior. So you had a sort of basic financial grounding. I looked at doing accountancy, and I looked at Accenture was at that time part of Arthur Andersen, which was one of the big 4 accounting firms, and they had a consulting arm and an accounting arm, and I interviewed for all of them, and if I'm brutally honest, the pay at the consulting arm was considerably better at the accounting arm. And they sold a good story, and I took it. But I was looking at with a view to going on to banking, and I hadn't really particularly thought it through. But the consulting piece was different. They paid a bit more, and it enabled a bit more variety, and I didn't have to do any more exams, all of which were very appealing. So I went into the consulting arm, which is, as you say, now Accenture, and had a very entertaining 3 years. But I'd always intended to look at banking, and so at the 3 years in, which was roughly the time I'd have qualified as an accountant, I then applied to the banks along with my peer group, who were the qualified accountants, and indeed some qualified solicitors, lawyers went in for that as well.
Right.
Yeah, brilliant. Now you have been involved, you have played a major role over the course of your career in over 350 billion worth of transactions. And out of all these transactions, which one particularly stand out to you? And can you tell us a little bit about them?
Yeah, so I think it's always that obviously the first deals you're really involved with stick in your mind. So one of the first deals I was involved in was selling a shoe business from one private equity firm to another, and we had done the information memorandum, and it was down to the, you know, we'd gone through a round of bidders. We had one bidder left. And I was a young associate, first year associate, and my VP had gone away on holiday, and it was down to the final negotiations. And I went to the closing negotiations overnight. It was just me. I was the only representative from the bank, and it was me with my client and a sponsor on the other side, who I still see, and in fact is an investor in businesses I know, and that was a hugely interesting. It was a piece, sort of, I can remember it clearly in my mind now. Just before I left, we were going across to the lawyers at about 7 o'clock in the evening, and I was there on my own in the office, sort of thinking to myself, right, I can do this, and getting my papers together, pulling myself together to go make the walk across, walk in confident. This is it. I'm negotiating on behalf of my client here, and I can see myself doing that right now, and that was 30 odd years ago, and it's crystal clear in my mind. Tiny deal. I think the total value of the company was probably about 90 million, but it sticks really, really firmly in my mind. Then what else? Selling Watches of Switzerland when it was sold the first time by what was then called the Ratner Group, and you should look up Gerald Ratner. He was a flamboyant character, and he and his CFO used to ride to meetings on matching Harley Davidsons, him just ahead and the other one, and the finance director just behind, going around with them to sell that business. Was that there's a lot of anecdotes from that, but the two of them pulling out from the street on the two Harleys, and I'll be trading behind in the cab, would be that that was very entertaining. Floating the Halifax, there was a big range of the old building started to floated in the sort of 2000s. We had to, the Halifax, the building sites were mutually owned, so they were owned by their members. So when they were floated, the documentation had to go to all the members. The Halifax was the largest, and we had to work out the logistics of when we could print the prospectus, because there wouldn't be enough paper available in the UK to print the prospectus, and you had to fit it in between the publishing times of the glossy magazines. So if Vogue and the paper magazines, because if you were on the same time cycle as the print magazines, they obviously print every month, so the paper was reserved for them. And then we had to work out how there was a health and safety issue as to how many of these prospectuses the postman could carry, or the post person could carry, to deliver them through the letterbox. So we had to work out what was there was a maximum weight of the prospectus, because there's great weighty documents, because the delivery service would be hand delivering these, and on one day, and they could only carry so many in their bags. So there was some really weird logistical stuff going through that, on top of all the other things. So that I remember. The extraordinary thing about this as a business is that you can do, so I'm an M&A professional, by background. That's what I've done, although the last 10 years have been more in management roles, and that, it sounds like I've been doing the same thing, but the reality is you can see from those three anecdotes, completely different, right? So sectors different, or situation different. The variety that you get through your career in this business is extraordinary. It really is, and it's endlessly fascinating. Everyone, because we are the ultimate M&A bankers and the ultimate generalists, you're pulling together, synthesizing information from the legal side, from the accounting side, the numbers, the industry, pulling it all together to work with your client in negotiating the best possible transaction for them. You're doing all that, and you're not the lawyer, and you're not the accountant, and you're not the the consultant who can drive the airline statistic, but you synthesize all that in a way to provide contextualized advice based on the other deals you've been involved in, based on what you know, and everyone's different. It's a fascinating industry.
Thank you for that great overview and the end, and especially the first deal and how it left such a great an impact on you and the rest of your career from that. So yeah, the next question I would like to ask you is, you have also worked in different sectors and regions, from European utilities and infrastructure to head of advisory group in Japan. So which one of these areas have you found the most interesting, and what do you think people going into investment banking should know about some of these areas?
Yeah, so I think the first point is it sort of doesn't matter. But yes, I started off as a generalist M&A banker, and that's fundamentally the original UK investment bank. So Morgan Grenfell, Warburg, that's what we did. We were generalist M&A and sort of an equity advice, and there weren't really industry groups were starting to come together about halfway through the 90s, led by the US banks, and financial institutions were probably the first industry groups to form. So I started off as generalist M&A, and then I went took a team to Salomons in 98 to start a UK business for Salomon Brothers, which became Salomon Smith Barney Citigroup, and that was a country team. So I was then had a more general coverage responsibility across a broader product set based around the UK. I went to Tokyo to help build the advisory business for Nikko Citigroup. Citi had just taken over a joint venture with Nikko, which was one of the leading equity houses in Japan. So an incredibly strong institutionalized equity franchise, which we wanted to translate into an M&A franchise, and we built the M&A franchise. And by the time I left, we were #1 in M&A in Japan the year I left. So that was fascinating because that was back to M&A, but how do you build on very strong client relationships to drive a slightly different product set, and it was both working with the clients in Japan and the teams in Japan, which was complicated in itself, because obviously I didn't speak Japanese, so I was one step removed from my clients. I was very much relying on other people, and that meant that you had to trust. It was real. It was a fantastic lesson in trust, because you had to have implicit trust with the people you were working with, because fundamentally you were relying on their interpretation of their clients to help drive the nuance of what you were doing. And then the other thing you had to do is you had to motivate the network, because the industry groups in the US had 1,000 things to do with their time, and number 497 was cover the client in Tokyo. But I had to change that from 197 to their priority list to 3, so that they would actually think it was really relevant to be putting content into my clients in Japan. And that was, again, you couldn't insist on that. You had to identify why it was the right thing internally as well as you would the right thing externally. So that whole piece of unlocking a broad institution, and how do you work with your colleagues, not because they have to, because they want to work with your clients, and then because they want to, then it happens. If they have to, they do it, by the book, and that was fascinating. I came back to run an industry group. Again, hadn't done that before. The utilities team at Citi in Europe had just decamped en masse to a boutique to form the Lexicon, and they left a big gap, and I came back to rebuild the team. So it was really a build that I was after, but again, learning then to focus in on a sector, and I ended up kind of the global infrastructure, utilities as well, and then back to when Barclays approached me and a friend of mine, Mark Warham, in 2009 to build the M&A business for Barclays in EMEA. That was a fascinating project where we had to go in and literally we hired 120 odd M&A bankers over a period of a couple of years. It was a complete build, but we had to create, we were building on an existing platform and a very, very strong debt capital markets platform, very strong interest rate FX. So a huge revenue base, and we had to create something that, again, that was relevant. So there's no point in coming in and saying, you know, being, you know, M&A, it's here, you know, you can relax, because in a best will in the world, our revenues were going to be tiny compared to what we were coming into. So we had to create relevance. We had to drive advisory in its broadest sense, advisory across the capital structure. How do you get a deal done? Well, that's just as much about the financing and hedging the FX. You know, you think of the volatility in interest rates over the last few years. You could have 10% or indeed in foreign exchange, you could have spent a month negotiating the last 10% in an M&A deal and lose that overnight on a movement in FX, unless you were also managing the foreign exchange at the same time. So we built an advisory practice that was relevant to the organization we were in. And Mark and I, you know, it was tremendous fun. That was a huge amount of work. It was literally, there was a guy called Sam Dean who came in to direct the capital markets, and it was Sam and us, and we were sort of sitting on the floor, being empty space, rather like it is today, actually looking out on the floor. There's no one out there at all, given where we are under the current environment. But you were there, and it was answering the phone and then building a team around you. Now, it's fascinating. So, but the long and the short of it is, it doesn't really matter which one you go into. The most important thing is that you work with people you get on with, because this is a tough old industry. And as you know, as a junior, you're working very long hours. You're still, you know, it's still one that's reasonably all consuming for me, 30, whatever it is, years later. And if you don't, it's hard enough as it is. It's impossible if you don't like if you don't like the people you're working with. So you've got to, the most important thing as you guys go out and think about, start looking at internships and looking at careers, is, you know, there's a lot of really good firms. Which one do I feel comfortable in? Which one reflects my values? Which one, frankly, do I like the people I meet? That's not a bad test.
Yeah.
Because
oh, sorry, carry on.
No,
I was just going to ask a follow-up question on that just specific bit where you talk about the culture and values of the firm. And it was really just about, as you've worked at numerous banks from Barclays and Citi, what was it that drew you to BNP Paribas, making that shift later on?
Okay, so I had I'd spent 8-9 years at Barclays, and the build project was sort of over. We'd done the build, and I'd sort of concluded that there were really no more build projects left in European investment banking. And I was retired, and thinking that probably that was it for me in banking. I'd really enjoyed the build projects I'd been involved with. It had been a fascinating piece, and I thought I might look at, you know, do I go plural, do non-execs? And a lot of my friends are going that direction. And then I was approached by BNP Paribas with the ask for, in their words, building a leading domestic UK bank. Now, 3 years ago when I started, if you recall, we were in, and you may not, because 3 years ago for you was a long time ago, we were in the midst of sort of Brexit, peak Brexit hysteria, I can call it that. And, you know, Banfine was going over to Frankfurt and saying, we're going to build the world's largest tower block here, and everyone's going to move, and it's all going to be fantastic. And, you know, the whole rhetoric was, it's all over. London's going to empty, everyone's moving out. And I was absolutely convinced that that was not the case. The London market is, you know, second largest financial market in the world. There's a huge weight of capital here, and there are lots of reasons why that might change, but most of them were within the policies of the UK, you know, and its interrelationship globally, than I think specific changes on Brexit. Now, undoubtedly, Brexit has had some changes in the finance industry, and you know, BNP Paribas is extremely well suited to deal with those, because we have a huge weight of business in EU27 as well as in the UK. But anyway, at that time, the rhetoric was very much that you know, Brexit was going to be very damaging for financial markets in the UK, and it was therefore extremely interesting to me to be slightly counter-cyclical, to be joining a bank that recognised that the UK and the London market was inherently systemically important, irrespective of Brexit, and willing to invest into that at a time when the prevailing sort of orthodoxy was going the other direction. And so that was a wonderful project, and it had a sideline that it was a UK-based role. So I'm running the bank in the UK, I'd say, not globally, and that was also hugely attractive. I'd spent my career traveling. I was, on a plane 4 days a week when such things were possible, and it was very, very nice thought to be traveling. I'd be hopping into a taxi or getting on a train, and so the combination of those two were compelling, and I put that, combined with the fact that BNP Paribas, one of the largest banks in Europe, with a clear objective to be the largest bank in Europe, are very much on the front foot. It had been growing steadily and both organically and by acquisition over the previous 10 years. Domestic bank, it believed strongly it needed to be multi-local to be global. And as part of their growth plan, the UK was sort of next on the list. It had been in the UK 150 years, but really wanted to consolidate its position here. And so that's been a fascinating time for me to be growing, to be expanding both, with people and capital at a time when when my peers haven't necessarily been able to do that. That's been very, very attractive. And this was not like Barclays. We have an incredible platform here. The piece that was missing at BNP Paribas was hiring a few people at key pivot points to sort of unlock the potential of the organization. So hired Andrew McNaught, who's very kindly joined us as head of M&A, hired Richard Choi, who joined us as head of real estate advisory, started a broking team, corporate broking, to deliver the incredible Exane BNP Paribas, which is our extraordinary equities platform. We have 19 out of the 30 number one analysts in Europe to deliver that to our corporate clients. We started corporate. So it's been a really interesting, different again. Every bank is different. This is an organization where a lot of people have been here for 25 years. It's an organization that prizes longevity in the firm. It prizes a consensus approach. It's very collaborative. It's very thoughtful. It doesn't rush into things, and all that I found enormously attractive. So, as I said, I think there are a lot of great firms. You just have to find one where you like the people, and this is one for me, that it was a combination of a really exciting growth project and people I could identify with, and that was very compelling.
Now, looking back into retrospective, how has the industry changed over the course of your career, and what do you think that future holds for investment banking?
It's very so. Look, M&A is interesting because fundamentally, it's about building trust with your client and delivering good advice against that, and that core hasn't changed at all. So whether that was what was happening, curiously, my father set up a tiny two-person with my elder brother M&A boutique in the 60s, or whether it was didn't last very long. Wouldn't recommend father and son combination working in them. You have to be very patient with your dad in those circumstances. My brother wasn't. So whether it was then, or when I started in the late 80s, or now, the constant is it's building trust with a client. It is it's providing independent, high quality advice that is you're as willing to tell someone when not to do something as when to do it, and that piece hasn't changed. Obviously, what has changed in the interim is that I started, and you would be typing letters, and we didn't have a computer on every desk, and you originally were doing, I still have my HP 12C, which I did my discounted cash flows on. So your modeling with the financial analysis was rudimentary compared to, and then we got Lotus, and then the models got bigger, and then but you still had a room you went into that had hanging files with the accounts for each of the companies and news clippings for the printed out news clippings. And if someone had the file out and hadn't left a car behind, you couldn't find it. You'd have to run on this desk to find. Not a lot of information. Then you had a limitless information, and then the issue became, how do you pass through all that information? A huge amount of analysis, great big fat books. And actually, I think we're coming out the other side of that now, because more and more of that, I suspect, going forward will be automated. So from juniors then producing and synthesize, AI is much more efficient at collating all that information, looking through it, finding. So I suspect we'll move to a point where a lot of that piece that's taken up a lot of junior time will then get automated. And you'll be back to the bit that I think is really interesting, which is looking at trying to find identify the wood, out of the tree. It's not get caught in the trees, set back, look at the patterns, see what's important, and give advice on the back of it. So I'm sure there will be a lot of technical advances in terms of how we process data, how we therefore analyze companies. But for me, the essence of what we provide as an M&A banker doesn't change against that. As an industry, we've seen a lot of changes on how capital is distributed. The equity capital markets has emerged in my time from a hand collated to the sort of full book build through to and that's going. I'm sure will evolve further. But the basic role of a bank, whether it is provide as an intermediary, bridging from the debt markets to the capital markets, whether it is this advice piece, I see a lot of opportunity for us in that, even if the details change.
And lastly, I would like to ask you, what advice would you have for younger people looking to go into the M&A industry, and what can they expect from it? Okay,
so first of all, first thing, as I tell every time I go and I just go and speak at a school, particularly my children's school, they'd always hide their heads at one point, because the first thing I'd say is I'd look around and I'd look at people's shoes and I'd point at, if you haven't got polished shoes, I'd say you're never going to get a job. So appearances matter, because this is a people business and you will get judged irrespective on not because of anything else. That I think it's people subconsciously, they're turning to you for advice, they're turning to their, so I'm here in a suit and tie, it's very old fashioned, but I think clients are subconsciously looking to be able, they want to feel that there's a constant and they can rely on people. So that attention to detail, whether it's polished shoes or whether it's the typo in your CV, critically important. Attention to detail. M&A bankers are obsessively focused on attention to detail, because a slip up in a contract can have huge consequences. So people are obsessively focused on attention to detail, and that will come through. So that's a little aside. What can I say? It's really about common sense. Everyone you're with on your course, or by definition, they're all very bright, right? If you're at UCL, you're already, the bar is pretty high. All your peers are bright. So it would be when you get when you get into banking, is that your peers are all super bright. They've always been first in the class and everything. But there's still, you can still distinguish yourself in that, and a lot of it is common sense. It's the ability to step back and go, does this really look right? The model's throwing this out, but and you don't necessarily have to tell the answer. You just have to be able to ask the question. Confidence to ask questions is the other thing. When you start, ask lots of questions, because it's way better that you ask the question than you labor along forever, not quite clear what you're supposed to be doing, and then in the end, when someone's expecting the answer, they're getting out, well, I wasn't quite sure. Ask the questions early on. So ask questions, apply common sense, and I guess the last bit is read the room, whether it's internally or externally. Read the room, look at people. It's all about people. And you don't have to be an extrovert. You don't have, no one needs to be anything, you know, there's room in this industry for all sorts of people, because our clients are all sorts of people. And you just want to be able to have empathy and connect and see what they're thinking. And if you're going down the wrong track and this is clearly not working, you know, change your approach. You see too many people who are, they've done the numbers, they've got the presentation, and they're going to do it irrespective of not whether the client is looking horrified or bored or, you know how to read the room. There you go.
Yeah, that's perfect. And I think that wraps us up for all the questions which we had. And I'd like to just say a massive thank you to you for coming in today and giving us your time to share your insights about your career and the industry. It really means a lot to us. And I'm sure that the viewers watching this video in the future will greatly benefit from it. So yeah, that's all from us. Thank you very much for joining us today.
Not at all. Thank you guys very much indeed. Thank you for inviting me, and all the very best to you and your colleagues. And we look forward to being across the table with you, negotiating at some point in the future.
100%. Thank you very much.
Okay, guys. Thank you very much indeed.
Yeah, thank you. Bye.
Thank you.
Bye.
Bye.